filth that's going on here, huh?
It started out just like any other day. Get your hands up. Let's go. Go a little something like this. Hit him with the remix, yo. Switch.
This is the end of side one of this record. Please now turn it over for the second time.
I've got a different idea.
Get down. Yo.
Stop hitting me.
What do you know about all the filth that's going on here, huh?
All right, good morning, everybody. Good morning. Let's get started. Oh, cool. My camera's not working. I love it. Love it when that happens. All right. Here we go. So we just had some data come out. Market is digesting it. Welcome in. Welcome in, everybody. What's up, MS Trader? What's up, Dajan? What's up, AA? What's up, MS? What's up, my EONS? What's up, Christina? What's up, J-Dub? Donald? Andre? 23 Gainer? Steve? Welcome in, people. We're gonna hop right into this. Sure, my mic's all good. Can everyone hear me good? Hopefully they can hear me all good. All right. Yes, the S&P 500. All right, so the big thing right here that's going on right now, in my opinion, obviously is a sell-off that's going on, but there's a huge level out on S&P 500 on the ES. Now, yesterday we talked about that 5250. Where are we right now? We're right under that. So all that liquidity was absorbed. It pulled last night. Perhaps it's moved down lower, but what we're looking at now is a gigantic order on Bookmap at 5232, and that could potentially act as somewhat of a floor. We can fill this in. We can see a flush of more liquidity. Now, when I pull this up and I look at in terms of the S&P 500 and where we stand, remember, this is only a down 1% day. We haven't seen more than a down percent one day in quite some time, or down 2% day. Actually, we can pull that up later today if you want to. We're floating roughly right around at the weekly expected move for the S&P 500. So the market's doing what the market anticipated, right? We had that JOLTS data come out. We're digesting a little bit. Market net flow is bearish as it stands right now. So this right here is not something that you really want to go up against, right? If the green line's above zero and the the red line's above zero and the green line's below zero, and you have them diverging and you have convergence, that's not a good sign for bulls. All right, that's not a good sign for bulls. What you want to see happen is this to turn gray. If this remains above the green line, you want this to turn gray, and that could potentially lead to a contra type of move. Oh my gosh! Everyone keeps saying it's not loud enough. It's too loud. Make up your mind, people. Man, everyone's audio settings are all over the place. But I've never had the problem when I'm on Twitch. It's all YouTube. It's all YouTube. Twitch people, man, they just get it, apparently. Let me know. If something's wrong with the audio, then I can fix it. But it should be fine. All right, thanks, Steve. Sound is fine. All right, thanks, Johnny. Yeah, but see, Johnny's over here, but he's over on Twitch usually too. You're so fine. It's too funny. All right, let's take a look at the market advanced decline line, looking at the S&P 100. we're not, I wouldn't say we're full-blown correlation, but we have 180, or sorry, we have 80 declining stocks, 22 advancing stocks. So we have very few names that are up. Happens to be around kind of energy and some bank names. The big hit from a larger market cap perspective today is Tesla. Let me see here. Where you at, Tesla? Where you at, Tesla? Why is it doing this? Okay. So Tesla took a big clip today. This one was one that we were looking at yesterday for if it crosses the high. It didn't. It crossed the low. So that invalidates that trade idea. And you could look at this as a potential bear flag breakdown right now in Tesla. So this one just keeps on getting the blunt force of sellers. Looking at Google over here, just an inside trading day consolidating after a pretty large breakout. So this one could be on watch here. Microsoft, I'm pulling up some of the bigger names. Microsoft had a nice little breakout of this consolidation, and now it's pulling back in, still within bullish context overall, getting clipped a little bit. And then Meta is holding up decently. It's still holding above yesterday's high. So we haven't, or sorry, above yesterday's low. As long as we can stay above that, that's a pretty decent sign for Meta. But if we start cracking below, today's low or the low of the prior day, I'd watch out there. But other than that, it is still kind of holding itself. It's holding itself together outside of its opening range for the 1 minute, and it's pulling back in slightly, ever so slightly right now. See what else we got going on here. NQ is outside of its opening range. We're looking at the first 30 seconds. You can see we broke down of it right around here. Came back to back test it and still been below there. As far as the gamma exposure levels go for the S&P 500, we'll pull that up. I'm sure that there's been changes here intraday. We're floating roughly around 5190. I think 5180 was an important level that started growing earlier in the trading session. Yeah, so 5180, and there's not much below that. So 5200 to 5180 could be that range of potential support that we see build throughout the day, unless if traders really start reaching out further. And if they do, some bigger rounder numbers would be like 5150, but that'd be pretty steep. I would say this could mark a floor, given the context of what it looks right now. It's still early in the trading session, and we're also, roughly at around the weekly expected move, like slightly outside of it right now. So if I drew that in, 5180, it'll look like this. There we go. Update my net gamma, see if anything's changed here. All right. So now I want everyone to I want to remind everybody, we're now in negative gamma territory, right? We're under the flip line, 5240. It moved up from 5230 yesterday. And remember, we say, selling but gets into selling, right? And you get these violent moves. What are we getting? Well, we're getting one of those violent moves. There's, not much more to it. Okay. But remember, violence can occur both plus and minus. So we're getting some sell off. It's freaky. It's crazy. People are probably trying to buy this dip and getting ran over right now. So be very careful doing that. If I'm looking at market net flow, remember, right, this is trend to the downside. It doesn't mean you want to necessarily short in the hole, but if this remains, right, this at least tells you, hey, lay off the gas of trying to buy these dips. When the dip comes, you're going to see strength come back incredibly fast and hard, right? It drives all type of emotion, all type of excitement. But if this remains in bearish context and we don't see this turn gray, and we don't see the green start picking up and the red start pulling down, if you don't see that, the moves can get faded fairly easy, right? As it stands right now, it's, Tuesday, and we're already at the lower weekly expected move. I've seen lots of times where we just come in here and we just trade around the weekly expected move for the rest of the week. We'll see it bounce up, we'll see it pull back down, or we'll see it get outside and we'll see it pull back in. It's in its happy place right now. Let's go to SPX. And we'll look at a little bit further of just how far can this dip potentially go. All right, so SPX is outside of its weekly expected move. Move these gamma levels. All right, we have the, what's this? That's not right. We have the April expected move over here at 50.96. So if the market wants to keep on getting hit this month, right, pay attention to down here at around 5100, 50.96. That is what the market priced in as far as the downside risk for the S&P 500 for the month of April. Further down, we have the quarterly expected move, which is at 49.85, so roughly 5,000. Now, we did have a change in the put wall. The put wall is now growing to 51.50. So this is going to change quickly because it's pretty similar, but 51.50 would be an area on the downside for the SPX chart as well. Okay, so we're pulling into this little, green box. 51.50 is way down here. Then this level on ES still standing with 3,100 contracts. That's pretty wild. Steve asking about the 2 standard deviation move. The 2 standard deviation move for, I'm assuming SPX on the daily? The monthly? If you're talking daily, the lower expected move for the 2 sigma is 517.82. So if I come out here, you go to 517.82, we've already hit a 2 standard deviation move on the day, hitting the lower weekly expected move. So this is an outsized move, bigger than usual. Let's pull up the 5-day moving average. It started going neutral. We cracked below it, right? The longer we stay down here, even if we come up, this is going to start turning itself down. So now, not only are we in negative gamma territory, all right, not only are we in negative gamma territory, we're also below a 5-day moving average that will start declining as long as we stay down in that area. Okay. Make this a little bit easier to read. Oh, kiddokies. Just reading some of this stuff in the chat. It's pretty good. Pretty good, man. For the week, a 2 standard deviation move. Oh, I'll show you that. Don't have it on the top of my head. So the S&P 500, 2 standard deviation move to the downside would be 51.36 and some change. We'll just call it 51.36 though, to round. Okay. Let's look at some of these bigger names and then kind of see what might be working in the market right now. These insurance names are still kind of holding up rather well. I wonder what some other ones are doing, like PGR or something like that. Yeah, these ones have been doing good. Insurance names have been really holding together quite well. Consumer staples, SYY is one of them. I'll just look at XLP. Coming off a little bit here. I mean, go figure, right? The market's going to have a pullback at some point, right? So this is what the S&P 500 looks like on the daily time frame. Let me remove this. It looks like, so check this out, right? Expand to the right. The Fed came out this day, right? We broke out. Boom, we love it. Everything's good. Took 1, 2, 3, 4, 5, 6, 7 days, right? One day erased 7 days, including the Fed day. And we're back here towards the low, which is what? We're just back testing this previous breakout zone. So this is a pullback in an overall uptrend. Pullback in an overall uptrend. Is it something more? Perhaps. Right? We've been seeing signals flip. We've been seeing negative divergences that have not been resolved yet, that keep on building. So yeah, to get a pullback makes sense at some point here. It's crazy. If I add on, this is what's really crazy. If I add on a rate of change, right? Do they even have it here? I haven't done this for a minute on this platform. I'll take off the RSI, rate of change. Let me change this to 2-day. 2-day rate of change. And I'll go out time frame. I'll go just 20 years. I'm probably not going to need that much. But if you look out to minus 2%, let me go make this bigger. Let me go like this. Take a look. We'll go -2, -2. I mean, it's been a minute since we've seen a 2% down day. Oh wait, I'm sorry. I added the wrong what's it called again? Setting. I meant 1 here. I was thinking 2%. I meant 1 here. Boom, boom, boom. Okay. Now I can see it. Okay. Extend to the left, extend to the right. Edit properties, -2. Here we go. Okay. So you can see we haven't had a 2% down day since, I guess the day would be roughly February of 2023. And then prior to that, we saw some volatility more. So it's been quite some time, right? Usually typically have them mixed in pretty frequently for the most part. But it's been a minute since we haven't seen like a pretty volatile, violent day in the S&P 500. Now, as I say that, we've also been talking about, I'll remove this. We've also been talking about how volatility has been contracting, right? If we pull up the VIX, let me see if I can pull that up over here. By the way, if you think that I'm executing into this, I'm not, of what's going on right now. I'm just watching it. Okay, now look at things are changing a little bit. Take a look. Hey, open up. All right, so this is the VIX. And we were watching how the volatility bands, right, or the Bollinger Bands, I should say, because that's what they are, got very, very tight from a weekly standpoint. If you look back to the left, we haven't seen it this way for a long time. You can look back further. I'm not doing it because it's hard to see then, but it's like 2007. We haven't had, it was the last time we were this low. Well, now we're starting to see, now take a look, the volatility bands, it's actually pulling down now after today and expanding up to the upside. So this is starting to turn back around. Now, you can go like this and doodle around, but the reason why I've been bringing this up is because markets move between contraction and expansion. That's what they do. This is a period of contraction for the VIX, for the volatility products, okay? So if we start breaking the gamma flip line, right? If we get below a falling 5-day moving average, this is all areas to be aware of because that's where volatility could really increase. And this is both to the downside and to the upside. Right now, the S&P 500 is finding a little bit of a bounce there from the lower weekly expected move. So you can't tell me it's not important to know these. Not to know these levels. It just, time and time again, these are very important levels to watch, not from a perspective of support and resistance, but from a perspective of risk management, because that's what it is. You know, options were designed to be risk management tools. I know it doesn't seem like that these days, but when you look at these expected moves, that is what we are doing. We're identifying a potential risk in the market. And then you take it, you know, and you look at it in terms of a distribution curve or standard, you know, just probabilities, and you go from that point. All right, so right there, we're in that green box where we kind of talked about 5180 to the low of the day, 5200, that zone in there, and we're roughly right there at that level, at 5200. Notice the candles here on the 30-minute time frame. Do you notice how it was small, a little bit larger, a little bit larger, a little bit larger, bigger range, right? They're getting larger and larger, more authoritative. And then you have the candles start bouncing up. One of my slides in my kind of course that I never showed anybody, it was talking about this specific, kind of look right here. I'll show you right now. Boom. This is one of the slides, right? So contraction leads to expansion. So that's what we just saw here on the 30-minute time frame. Downward momentum is increasing. Fear is getting extreme. So when fear is getting extreme, if you're executing in fear, right, you're really hoping. You're honestly hoping if you're trying to execute into a larger period of expansion. You got to be very, very risk focused. So now what you want to really see is, it doesn't necessarily have to go down, but you want to see price contract a little bit, or you want to see price, contract a little bit. And right now we're just getting volatile movements, which is good for day trading if you have these key levels in focus. Where did my, there it is. There she goes. Okay, so you see it slow, and then it really started picking up steam here. Market net flow, still bearish. Convergence is kind of waning over here as the market is trying to move itself up higher. So as we're looking at this, right, there is no higher low yet, right? We have to go down even smaller time frames. Maybe if we drop in and we say hello to like the 5-minute or the 2-minute. You can even see here there's a low, a higher, a lower low. Sorry, a high, a lower high, a lower high, a low, and a lower low. So really, I mean, you want to see a higher low, and then you want to see price break one of these lower highs. And when that happens, then you at least have an idea of risk. But right now, right, in negative gamma territory below a 5-day moving average, we're just seeing volatile price swings right now, with dealers more to the sell side, given the context of market net flow. So this is more about a protection day than anything for me, because I don't like trading into this stuff or executing new swing trades blindly into these levels. I want to see what the market wants to do, see how it wants to digest this information. I want to pull up my account, see what's going on. I haven't looked at my portfolio yet. I'm not really too worried about it because I've been preparing for more volatility, for a while. Yeah, so my account's down 0.37%. S&P 500 is down 0.97. So I'm wondering why, because I do have technically a little bit higher beta. I'll tell you why right now, because I'm in China. China names really holding everything together, including my portfolio. So China was one of the ones that we posted out on the trade ideas. It happened to play out, and it's holding up pretty well in a market where we're getting a pretty decent correlation to the downside, right? So there's very few names that are up right now, right? 20 advanced names in the S&P 100, that is, which are the larger market cap names. And pretty much all of mine are down except for China and my consumer staple. Let's see here. Yeah, my healthcare name, I took some of those profits off, so that's down a lot today, but I took off quite a bit of profits already. I traded Cure, which is the proxy for, it's just a healthcare ETF, but it's leveraged. Amazon's down slightly today, still up in the position. Microsoft, I'm basically at break even after today's down day. Took a small position there. That's really it. So I'm just holding steady. Holding steady as the market does its thing. Let's take a look in the chat, see what's going on over here. Where's my Twitch chat? Boop, bada boop, bada boop, bada boop. Hey, yeah, thanks. Yeah, the YINN position is doing pretty decent. I've removed some profits, by the way, just so everyone knows. So I trimmed a little bit. I'll pull it up. So I traded just as a proxy YINN. It's just a leveraged ETF. So it's up on the day. I just took a little profits. Nothing crazy, right? I played here on that day. It moved up. It's up around 10%. I took a little profits yesterday. I took some more today. All I'm doing is just trimming the positions up. And then when it pulls back or consolidates, I'll add more, right? That's it. That's all I do. Nothing crazy. Let's see here. Hey, Casey, thanks for coming in, man. I'll pull up some of those names for you, buddy. He wants to look at AGO, VPU, NEM. NEM's Newmont. That's one that sounds familiar, so maybe I'll start with that. Google's kind of improving, saying 99% of my portfolio into BB. So wondering about the price action looks to you. Your 401k allows you to buy BB, like legitimately BlackBerry by itself. Usually like employer 401ks, like you can't pick individual stocks. At least from my understanding. Unless it's like, I guess your own personal one or company owned or something like that, I guess. All right, we'll look at Newmont. Newmont. So a lot of miners are getting a lot of attention, and I hate when miners get a lot of attention because they're very hard to trade. I think they're more of an investment vehicle than anything, right? So if you believe that miners are going to go up, you probably believe silver is going to be going up too. And honestly, silver looks pretty good, right? If we look at the chart of, all right, GDX, we'll just look at, right, GDX, right? We've been on a pretty monster tear, and we haven't really consolidated after this breakout. So it's looking strong, it's looking good. And then if you look at the price of, we'll just go SLV as a proxy, silver, you know, it moves hand in hand. There we go. So silver, these are the type of things that I like to see, right? The consolidations happen. So this was a perfect consolidation there in the price of silver into the rising 20. And now, like, right, yeah, so I wouldn't be executing into miners right now. I wouldn't be executing into silver right now. I'd be waiting. I could just wait. I don't care if it goes up higher like this. I know it's going to consolidate at some point. And when it consolidates, that's when I personally execute, right? Because if you chase and move up, right? If you chase this move up, right? It's going to take some time to consolidate. So it depends on like how long you're willing to stay into a position. If you're willing to stay into a position long term, then you should be looking at like the weekly time frame. Okay, if you're like saying, no, I'm going to hold on to it for years. Okay, look at the weekly time frame. Then you can go like this. You're like, wow, it's actually like breaking out, right? So now I can have a stop under this little pocket, give it more room, and this looks like it can start taking off, we know, significantly higher. So time frame matters, and then that'll allow you to really get your position size honed in and give you, more, room. If we do go through a longer period of consolidation, you just got to let it do its thing. Like, I mean, look at to the left of the screen. Where's silver gone for multiple years? If you bought this rip up right here in, I don't know, 2019, if you bought this, congratulations, you've been going sideways for many years. You know what I'm saying? So you wait for the consolidation, and you can see we went lower. It actually got a higher low, and then it started getting tight right in here. And now we're starting to break out even more. So if this starts tightening up or comes out and tightens up, it would look like a really good setup. Okay, but if you're looking at it from a larger term for time frame, weekly, like maybe you can establish a position, and then if it does consolidate, then you can add to the position and so forth. So there's literally unlimited ways that you can approach this from a trading perspective. From a trading perspective, from an investing perspective, from a different time frame perspective, there's no right or wrong way. It's only right for you. But you got to understand there's only 4 things that you can focus on. What you're buying, which would be silver, when you buy it, how much to buy it, and then when you sell or when you stop out, okay? You can't control how high it's going to go. You can only control what you can control. I get that the Hollywood effect. People want to say like, I predicted this will happen, but you didn't predict anything. You made a forecast and the forecast was right, but you've made plenty of forecasts and the forecasts were wrong, right? So the goal in trading, the goal in investing is to be wrong fast. And when you're right, you ride that wave as long as you can. Okay. So yeah, the weekly time frame looks pretty good here. I want to look at the market. I want to look at the heat map here. Look at energy. So hey, right? If you watched yesterday's very first stock market brief live stream, we're talking about how energy was moving up, right, with the 10-year yield. Right, we'll pull those up in a second, and how like the correlation wasn't really there. But now look at energy follows through today, and we're kind of seeing, hey, oh shoot, everything's red across the board. Okay. So let's look at some of these from more intermarket assets. So the big thing is going on right now is in the bond market. I can assure you that there's some big volume being traded there. I didn't talk about it yet, but there is some big volume traded in the bond market right now. And the 10-year yield's breaking out to a new high for the year, right? It's coming off the highs. It's coming in a little bit. No surprise, okay? But that was a big, powerful move, right? It pulled back slowly. Even here, we were talking about how it was flagging, and it looked like it was just going to come for another run up here. Well, data comes out, right? Boom, we get some follow through. This puts pressure on markets. Now, 10-year yield also has a tight correlation with oil. So oil, no surprise, right? It's off the highs like TNX, and it's coming in a little bit. Now, I wouldn't invest in oil right here. I wouldn't buy oil right here. I liked it here, and I liked it here, right? The consolidations. So if I look at XLE, because XLE has a tight correlation as well to oil, look at this thing, just monstrous move. We haven't seen highs like this for how long? Look at it. We haven't seen highs. Is this new highs? Hold up. No, it's not new highs. No way. No, it might be. Let me see. Give me a second here. Let me see here. Let's go max. Let's go maxi. Yeah. No, new highs. Okay. Well, we haven't seen this high since, what is this, 2011? 2013. Yeah. Energy hasn't been this high since 2013. You look at the weekly time frame over here. It's breaking out. It's making a very strong move. You saw a low, a higher low, a higher low, a higher low into this pivot. Now, you have early entries down here on the daily time frame, excuse me. But now I look at this, I'm like, now it's getting so much attention that people now are going to start looking for energy names, right? When they should be looking for consolidations. Boom, flag out again. Let the 20 period catch up. You can run a Holy Grail scan. The Holy Grail scan, I bet you, will light up with energy names when all of a sudden we start pulling back nice and softly. If we start pulling back in energy names nice and softly, where volume's drying up and price action's drying up too, contracting, it's going to set up great opportunities. All right, look at this tight little pivot right here that we broke out of. Look at this tight consolidation. It's going to happen again. Whether it breaks out to the upside or downside, I don't know, but I guarantee you it will contract again. That's what happens. Turtle Hulk just figured out how to do a stop loss on RH, Restoration Hardware. So Restoration Hardware is one that I'm actually really eyeballing here because we had a powerful earnings gap, right? So we had this power earnings gap, prices coming in. That's pretty wild price action, but look at the volumes drying up here. So I'd like to see how this tightens up, if it can get tighter, and then play a potential move back out to retest the earnings high. It's not doing so right now, but that's what I like to look at, right? A while ago in the trade ideas tab, I showed once again some of the power earnings gaps that were happening during the process. Said I pull up that thing, but so for example, like Crocs was one of them, I think App was one of them, and I think Pega was the other one. And you have a powerful earnings gap, price consolidates, it pulls back on lighter volume, and then you wait to see if there's an entry point. This one, I mean, this was a fast pullback and it started ripping, right? Strong stocks typically get stronger, and that's what you kind of want to look for. Those are huge plays that I play out. I love playing those plays. My last one of them that worked out really well was Target, right? Target, powerful earnings gap, pulled back perfectly, and look at, we played it right into this prior swing high, and now you wait for it to consolidate again. It'll set up again, and you look to see if it can, play out. Even had a powerful earnings gap over here that we talked about, and it consolidated tightly and then kind of just drifted higher. Pega, I don't know whatever happened to Pega. This one still consolidating. Powerful earnings gap. It didn't even crack the low or the high. It's still trading literally within that. So that's kind of a walk on that. App was another one. Look at this. Powerful earnings gap, consolidated, and then we started moving higher. Right now, look what it's doing. It's consolidating again, pulling back like this. Not bad. Dutch Brothers was looking good. This was part of the Holy Grail scam, but you can see it cracked this low. So this one would be a stop out. So this would be just on the watch. I was looking for a pullback here and some strength, but no strength, no follow through. So no entry. Tijen, you only traded penny stocks? Man. I've never really been too much into the penny stock stuff. Go figure, right? Boring Mike over here. I don't even like day trading that stuff, even on big moves. Like the bids could just too crazy. The bid ask spread could just blow to smithereens. All right, he's asking Indian dude on Michigan trails said BB. I mean, I don't know, dude. Think about it. BlackBerry. Can we get a short squeeze? I'm assuming that's what you're playing for, not an investment, but just to trade it for a short squeeze. We're moving into an environment where we can get more short squeezes, I guess. We're consolidating here, but you have, when's earnings? Isn't earnings right now? Yeah, tomorrow? I'm not initiating a trade into Best Buy. I don't, BB. I don't care if it goes way up or, way down. The thing is, I don't execute into trades, and if I do, and it's into earnings, it's going to be the smallest position because you have to pay attention to the earnings expected move. So going into earnings, right, you're looking at roughly a 204% vol, plus or minus $44. That 44 cents. That is the expected move as it stands in this current moment. So that means 44 cents can take us up and rip us up 16%. That's just one standard deviation, or it can take us down, right? To 230, 240. Boom, boom. That's the expected range. So really, as you're moving into earnings and you're placing a bet, you're literally just saying, hey, I'm gambling. Because you're giving up all your edge as if you're trying to professionally manage money, right? And you're putting in a huge percentage of your portfolio into something like this, into an earnings event, it's literally just saying, hey, I'm YOLOing, hope it goes up. And if it does, cool. Here's the problem. One of the worst things that could happen is it actually goes off in your favor. Say it goes out 2 standard deviations, you make a big money. Chances are you'll come to a period in time where you see another earnings play and you'll try to do it again. And you'll try to do it again. And one time is all it takes to destroy a portfolio, especially if you're putting in a huge percentage. If you don't care and, then it is what it is. Then you got to do whatever works best for you. But that, for example, if I were to come on here and say, hey, I'm going all in on BlackBerry in my entire portfolio, and it goes in the right direction, and then all of a sudden people say, dude, this guy's so smart. He got it right. He made so much. That'd be the worst possible thing I can do in front of an audience, because I know any smart person would look at me and go dude, you are an idiot, right? That's exactly what any intelligent person would do, because they know exactly what my outcome's going to be over time. I'm going to lose. I'm going to lose all my money. That's the sad reality of it. Sorry I had to be blunt, but that is the reality of it. That's just the sad reality of it. If you were to trade this and you look at, hey, 15% up, 15% down, and you were taking a 3% position in a portfolio because you wanted to gamble it, and then it goes up or down 60% or even 30%, okay, cool, you caught a win, but you also didn't risk your entire portfolio. You see what I'm saying? So there's way to structurally approach these type of things. Hope that makes sense. Because you work in the field you got in? Does that mean that you have inside information? If that's the case, that's also not smart. Yeah, I don't believe it, but if you did, you'd be very dumb for saying that on the stream. Because that is, yeah. Okay, let's take a look at a couple of these names over here. Let's knock. Yeah, knock is a defensive name. We're getting some of these defensive names to kind of get hit a little bit. Wait, is Northman Group, is knock one of the defensive names? I can't remember, actually. I believe knock is, right? Knock? Oh, okay, Christina, thanks. Yeah, I just paid attention to one of them. I believe it. Well, it came into at least the content was decent because hopefully it told people other how I view earnings plays. But yeah, it would never go crazy. So NOC, so Northrop Grumman Co. I'd rather just say knock. Right. I think okay. So Dijan, I think we talked about the breakout and potential back test. That's what's going on right now. So this looks like it could be just a healthy back test. We have earnings coming up, but remember, so we have a low, a higher low, a higher low. Then we had a nice consolidation. I think. Come on, help me remind me. But then we said, hey, if we can look at this as a bearish structure or a bullish structure breaking out. Well, we broke out, and now we're coming into a potentially back test. So in my opinion, I think that this looks fine. I wouldn't execute right here or into it. I would wait to see if it tightens up back again, or maybe even wait for earnings. But if you're in a position and you've played it outside of this, where would your stop would have been? Would probably be down here. Maybe now it's break even if you're being tighter, or a little, a small loss, or maybe you even took partial profits. That gives you room. That gives you flexibility to make decisions, right? You could also look at this and be like, hey, we're just pulling back down to this lower channel, right? You could still say it's in an up channel. If I go to the weekly time frame, it might give us a little clearer picture, right? Weekly time frame looks a little different, but you can see how it's just, this is what's scary to me, is you see when it hits volatility, it hits, and then all of a sudden it takes a stairs back up. So it looks like, on the weekly time frame, this level right here, 485, 490, that's what you really want to have it clear. Boom. That would be pretty nice. Or even if it pulls down like this, you can see a weekly kind of inverted, inverse head and shoulders, I guess you can call it. And that could look pretty nice there too for knock. I think one of them that I was paying attention to was LHX, and I couldn't re-enter into a position because, yeah, the other day, right, we had that flush out, right? Price was getting tight, and then it expanded to the downside. I think I traded it right. Where did I trade it? Oh, I traded it right around here, this consolidation, and that day knocked me out. So this day got me out, and I couldn't enter back in because it didn't set back up, and it followed through to the downside. Typically what I see is I get knocked out and it goes way up. It goes straight up. What was another one too? Was it NTX, was it? No, it wasn't NTX. I can't remember. What was it? What was that? It's in the S&P 100. Yeah, it's in the S&P 100. What is the defensive name in the S&P 100? It's a big one. Somebody help me out. Yeah, Dijan, that's a great way to put it. The hard thing of the market is how you control your emotions. Not the market versus you, but it's you versus the market. Or sorry, you versus you. RTX, thank you, Dunk. And yeah, Raytheon, thank you. LMT is another one, another big one, but I was thinking RTX. Thank you. Yeah, so RTX. So this is funny because I was looking at LHX back over when I was looking at both of them. I was looking at RTX. This happens a lot. And I was like, dang, this thing is consolidating sideways, right? And I kind of put it on the back burner because I was more focused on LHX. And then somebody pulled this up on stream. They're like, yeah, well, because I was talking about LHX. They're like, why don't you look at RTX? And I looked at RTX while I'm in LHX. I'm like, dang, this one looks better. Before it broke out, and go figure, I get stopped out of my position, and this thing rips. So nice consolidation, good follow through. Now, I'm not going to make entries up in this area, but you can look for consolidations and so forth, and go from there to see if there's continuation. Some of the names that I brought up on yesterday's market brief was Qualcomm. Let's check into Qualcomm. Qualcomm holding itself together rather well today. It's just an inside trading day after a decent breakout. We do have earnings. I mean, it's earnings season, right? So May 1st, so we have some time. But overall, I mean, I think it can strike this high again to be nice. But overall, just consolidating sideways after a little bit of a breakout right there. And then we talked about, what was the other one? CHD, which I did take a little position in. What are we doing here? Are we down? We're down slightly. So it was higher today, but now it's kind of reversing on itself, sitting around the lows of day. So not an inside trading day. But this one's also just consolidating here nicely. And we're kind of coming back in a little bit. So are we going to break out and continue? Maybe, maybe not. I got into the continuation. Could be a bull trap, or, you know, it might take some more time to step back up. If it comes out down here, I'm going to get out and I'll wait. Right? But I'm not putting a position that's going to damage my portfolio by any means. I'm refreshing my portfolio, just going to see where I'm at. Healthcare position is getting clobbered right now. I'm going to take a look because, yeah, this is a big hit down on healthcare. I'm hesitant to get out of it because I've already taken profits. But also, it's breaking some key levels, but it's also, that's a pretty aggressive move in a short period of time. And I think it still pairs well with some of my other stuff in my portfolio, so I'm kind of hesitant to get out of that. I'll give it to end of day to make my decision. See what happens with healthcare. If we start bidding back up into around the 50-day, then I think that's fine. If we start closing around the lows of the day, I might just clip it and then revisit it if it starts strengthening back up again. Visit my Amazon position. Amazon's just been chopping up here. Amazon looks good, right? It looks good. But it's still floating around 180. So yeah, I'm up a little bit here on the position. It can be down in a second though. It can like literally, it can come down and snap me right out. But 180 has been that sticky area. We started breaking out and then we followed through back down to the downside. If you look at XLC, right? XLC, the biggest holdings in XLC is Google, right? And Amazon. Google, Amazon, and Disney. You can go to the market watch. No, you can go to the Analyze tab. You'll see Meta, Google, Verizon now, EA, and then Disney. But look at Meta, and then you have two tickers for Google, right? That makes up for 22%. So you have Meta and Google equal darn near half. And you look at this, and we're looking at this consolidation here. It breaks out, consolidating again. I mean, that doesn't look bearish, people. It doesn't. So Google and Meta, right, are holding up rather well if you look at those names individually. Meta, right, we didn't clip through the low of here. We're seeing a high, lower high. We haven't seen it come up yet to put in a higher low, but you want to hold yesterday's low. It's kind of just floating around there. Like I'm just hesitant to establish new positions in this current environment. Let's take a look at the market, right? We bounced from the weekly, expected move slightly. It's pulling back in a little bit. No surprise there. We said that at the beginning of the episode. This is likely to see happen. We talked about this range that we can potentially start finding itself a floor in. So we'll update this, see if it's changed at all from a structural like gamma perspective. We're right there, 5,200, 5,180. We're in that zone. You can see the candles on the 30-minute time frame. They're still pretty large ranges. So I'd expect if the markets are going to calm down, you'd see these ranges start to get a little bit smaller. People maybe might get a little bit more frustrated if they're trying to buy the dip and it's not going anywhere. We'll take a look at market net flow. This is a very bearish divergence, but we did lose convergence. So take a look, right? So when you lose convergence, you can have contra moves in the market. What happened? The market started moving higher and now it's pulling back down. When it started pulling back down, what happened to convergence? It's starting to wane a little bit here. So if this turns back to red, it could potentially be the first signal, an early warning sign saying, hey, the flow might continue to the downside. So right now, when I look at this, if you're trying to like execute into it, when I see gray, that means pretty much no play, right? No play because there's really no edge, right? There's clearly a bearish divergence, but we don't have edge. So if this was turning red, if we get the market to rip up, then it starts turning red and you're coming into a prior area of resistance or putting in a higher low and then you break down like this, that would be an indication of saying, hey, if I want to take a short hit here. And when it comes to shorting, I'm incredibly different type of short seller than many people. I don't YOLO positions into short, I don't YOLO positions into long, but they're always like smaller positions and they're typically significantly more aggressive. I'm just not much of a short seller. It's not my strength because trading to the long perspective, I find to be incredibly easy, right? Much easier than it is to be a short seller. Short sellers have to deal with rip your face off rallies, right? So you get these big moves to the downside. As long as you're not short in the hole, but yet you're fading big rallies, I mean, I'm fine with that. I'm okay with that. Like, let me show you an example of my last short that I did. But my very last short position was a very quick 1 day or 2 day or 1.5 day, and it was XLF. Now, XLF has made this huge run. Since my short, it is now, well, actually, it's higher actually from where I originally shorted. But I'm out of the position. I was out on day one. I shorted this day right here. Then it went a little bit higher and then faded, and I got out pretty much somewhat near the end of day, but not quite at the low. Then it followed through a little bit more. And the reason why I faded it is because we went on a monster tear and I looked at the components of XLF, one being like Goldman Sachs, for example. It had a huge, massive 4% day breakout. And my thought was, look, I think that most of these names probably are going to have to consolidate these moves because a lot of moves happen in a very quick period of time. Goldman Sachs pulled in bullish context, and then we started moving higher. So what did I do? I put on a small position against my long positions. It wasn't just, hey, I was net short. I wasn't. I was net long. And I got out. That's it. Very easy and lucky, right? It was just tactical, fast move, overextended on a shorter time frame move. That's all it was. Nothing more. You don't need to read into it. When I look at XLF, we're moving into the earnings season. Okay, what do I mean by earnings season? Coco's pissed right now. That means we have now 8 trading days left before we go into the likes of BlackRock, before we go into the likes of Wells Fargo, which has been, what the dang heck? Oh, someone's at my doorbell. All right, give me a second. I think someone's here. 1 second. I'm gonna pull up Bookmap. Give me a sec, guys. I'll be right back. Gotta deal with this really quick. Okay. Okay. All right. What's up, people? I might have to step away again here, but it's fine. I'm keeping this trip going. Have somebody working on a fireplace. I had to just get it worked out. Some stuff that's going on with it. Somebody. Where were we? What were we talking about? This is why I don't have to Moonraker. I feel you there. feel ya, dude. I didn't even know. I forgot it was today. It's a random surprise. 52.32 still remains that level to be paying attention to. Big area. If this starts breaking, we're going to see a lot of volume come in. That's some big orders hanging out there. So right now it's acting as a supportive bid for the market. So it could act as that floor for the market. And what are we doing right now in the S&P 500? We'll look at the 15-minute time frame. Price action's kind of coiling up here. It's kind of getting tighter, right? We're putting in lower highs, but it's consolidating right around that lower weekly expected move. Kind of just doodling around there. Little doodles. Take a look at market net flow. We're back to having a convergence with the bearish divergence. So it's more bearish than anything right now. So just be aware of that. But we're just floating around in this current zone, right? 5180 to 5200. Take a quick update here on 0 date. See if anything's happening from that perspective. We're still roughly, 5190, 5175. So it looks like it shifted slightly here. 5190. 5175. So it shifted down a little bit, but we're still kind of within that range, within that area. So we'll just keep it as is, but those are the put wall would still be now 5190. Look at net gamma. Put wall 5150. Still the call wall is 5300. Yeah, if I have to leave again, I can put on some TV or something. I think we're talking about, yeah, Wells Fargo and some of these other that have to report earnings. Wells Fargo's reporting, Citigroup's reporting, and look at these names. I mean, dang, these things have made big moves. Let's look at Capital One. So Capital One, right, on our live stream that we did when we showed the, we were live streaming and commenting on the Hedge Eye best stock ideas, and one of them was Capital One. And I can't remember if it was like from this day, or I think it was actually this day. Yeah, I think it was literally this day. It was a couple of trading days ago. And they said this was the best idea. And we looked at this and we're like, from a technical perspective, it's not something that you'd want to chase. So if you were to long this, it was a nice bullish breakout. And now it's pulling back. So now as price tightens up, if you're bullish on something like Capital One, you look to these pullbacks, right? You had a small pullback here, blew up, and then we have a little bit more of a pullback here. If you look at the weekly time frame, right? You can see it a little bit more clear. That was a nice breakout, solid breakout, and now we're just having an inside trading week. On deck for the week, we still have the big data on Friday. Job numbers. What's up, Pink Freedom? Welcome to the channel. Thanks for subscribing. All right. Any other specific tickers that people might want me to pull up? Right now, the market's kind of just digesting. It's just consolidating now. The volatility came in. I will note that we still do have, well, now it's kind of waning again. It's kind of waning again here. The bearish divergence, the green line just ticked above the 0 line, and we're losing convergence to where we can have actually contra moves. So be aware of that. This could be a potential breakout where we get some relief and it starts rallying up. That's always a possibility, as we're already at the weekly expected move, the lower weekly expected move. Let's look at SMCI. There it goes. It's starting to break above the daily VWAP right there. Potential area of resistance on futures EM. We have some areas of liquidity above us. Nothing crazy, but 5250 to 51 is a decent level there. So if we are going to get a bounce, look at that level. If we look above us a little bit further, I mean, not much. And then beneath us, that 52.15 was also a decent level below this big old wall of support here, or potential support. My most profitable trade ever? I don't even know. I don't really go like for a big, huge win. I go for just space hits. I'm probably like, I don't know, 15, 20,000, I guess, would be the biggest one. I mean, technically even more than that. I mean, it could be hundreds of $1,000s if we're talking about all of our trades. Like if you include like more than one just asset, right? Not just an equity trade. Then it could be 100+ thousand. But when it comes to like the financial markets and just swing trading, I don't really like go, that crazy to make a huge one single outsized gain. I really do focus on just the base hits. And you hit enough base hits, man, you can make some good money over time. Remember, if you just focus on, like a lot of people say, hey, 2%, can I make 2%? Can you make 2%? Well, if you can do that every month, that's 24% a year. And if you can do that for 5 years straight, you'd be making 24% a year, 24% a year, 24% a year, 24% a year. You'd be among the top tier of swing traders, right? And you can keep on holding that. You'd be one of the best. And that's all you would have to do is focus on 2%. Your portfolio can literally move 0.3% in a day like nothing. Can I give thoughts on ICT concepts at all? Big topic at a high level. I don't understand ICT. I really don't. Honestly, so this is what I think when ICT, this is how I think about most technical analysis. First off, I think, okay, so I'm assuming that ICT is just strategies, but it's just reading price action. And then they layer on all this jargon. There's so much jargon put into things, but it's literally the same things as other topics, right? It's the same thing. It's just repackaged and repurposed, and you get a reclaim around it. Like, there's 5 principles to technical analysis. If you understand the 5 principles of technical analysis, you'll become a better chart reader, and then you could become a better trader. I'll share with them right now. They were in this PowerPoint that I put out. I just never gave it to anybody. Let me see if I can pull it up. Give me a second here. Yeah, basic principles of technical analysis. If you really understand this, I mean, you can try to find the holy grail of trading strategies, but here's the thing. Even if you understand all the concepts of ICT, of whatever the case is, right? Whatever the case is, it's still going to come down to you being able to size your positions correctly, right? And controlling what you can control, which you can only control these 4 things: what to buy, how much to buy, when to sell, when to buy, and when to sell. Give me a second. My dog is going nuts. Yeah. All right. Where were we? All right. So we're talking about, my thoughts on ICT, which I just know that it's, from what I've seen, it's just a way to trade, way to read charts, way to read candlestick charts. And there's a lot of talk, which this is where I really differ, is they're talking about liquidity, but they're not looking actually at open liquidity. They're looking at what has happened in the past, right? And that's part of technical analysis, right? Part of technical analysis, the very definition of technical analysis. All right, let me see if I even wrote this down. Let me see if I can pull it up. Hey, chill. Technical analysis is the study of market action primarily through the use of charts for the purpose of forecasting price, right? Forecasting. Now, I think one of the most important aspects now we have to include in our technical analysis is looking into the future. And to do that, you can look at things like options implied moves. But when it comes to liquidity and you're just looking at a candlestick chart, you can't see resting orders. You need to look at level 2. You need to look at market depth. That's why when I bring up Bookmap, if you're pulling up a candlestick chart of ES and all you're looking at is a candlestick chart, you do not see this liquidity down here. You do not see it. That's just a fact, right? So when I've seen a couple people talk about it and stuff, and they say about, oh, they're good liquidity pool right here. What do you mean? Like, because the market bounced from that level? Maybe it just bounced because of dealer flow. Maybe that's it, all right? So when it comes to various strategies, which is fine, you can become very successful, honestly, with basically any strategy, right? But it's going to come down to one thing that most people don't talk about, and that is the position sizing of it. Now, what I was saying was there's 5 principles to technical analysis. The 5 principles are right here. So if you understand this, you're going to become a better trader. Price action can equal emotion, meaning that what we talked about earlier today, see how the price action was small range candles and it started getting bigger and bigger? Well, guess what was probably happening in Twitter space or X space? People were going crazy. Oh, the market's going crazy, right? But we know that it was in negative gamma territory. So this is actually quite normal to happen, right? And instead of just saying, hey, where can we find support by looking to the left of our chart? Oh yeah, it could potentially bounce in this area. No, we're looking at gamma exposure levels, where the markets are currently positioned and how dealers are positioning today. As it is looking at what's currently taking place. And look at, by the way, look at no convergence, market up, right? As we crossed up through that 0 line right there at the green line. You don't see that by reading a candlestick chart. I know professional traders that don't even look at a chart. They look at the DOM, the DOM, and then they just play an opening range, right? There's so many different strategies, so many different approaches. So price action equals emotion, right? That's both extreme greed, extreme fear. The king indicators were typically price action and volume. That's where basically this is where all indicators are based off of. But now, if you're not using volatility in the mix to be a king indicator, to be one of the main indicators, I think you're missing out. Volatility is a huge thing. Now, there's 2 types of volatility. There's historic volatility, and then there's also implied volatility or future volatility. And that's where we spend a lot of time on those expected moves, what the market's pricing in for potential risk. And we look at earnings expected moves, daily, weekly, right? Just to give a good idea. And you can pull that up on basically any optionable traded name, but if it's not like that liquid of a name, it means a little bit less. Another basic principle is to understand that the trend is your friend, or in other words, strong stocks get stronger, weak stocks get weaker until the trend changes. And trust me, trends change. Trends don't typically go down without a fight, but trends do change. It's like a Ed Hardy t-shirt, right? This used to look cool on people, and you look back at it and it is no longer cool. It is quite stupid. So don't wear Ed Hardy. Maybe they'll make a comeback, but guess what? Trends sometimes make a comeback too. You just never know these days. Now, the next one, which I find and I talk about the most, is markets move between range contraction and range expansion. All right, and I look for periods of contraction. So we just previously stated here on the 15-minute time frame, market was putting in lower highs, but it looked like it was contracting. Well, guess what? Breaking out of that, we're moving a little bit higher, right? On the call right here, where we started going into no convergence, which is where you can have those contra moves. Doesn't mean it can't pull right back down. But contraction leads to expansion. That's why, one of the more recent ones that was just such a clean breakout was AIZ. So if you're in the group, you saw this name, AIZ, right? Strong stocks get strong. The trend is up. The 20 is above the 50. It's above the 200. A nice spread between them all. You have a high here. If you thought that was a high, you were wrong. If you thought that was the high, you were wrong. You thought that was the high, wrong, wrong, wrong. Okay? Then you go through a period of contraction, and this thing just tightened up really tight. Gives you, right? By tightening up, what are we talking about? We're talking about volatility. Volatility is contracting, right? And volatility is one of the key indicators. When I talk about volatility here, this is looking at historic volatility. It's, the average true range is getting smaller and smaller and smaller, price actions coming in. And then, because we know that ranges go from contraction to expansion, we look for the breakout. And if we get stopped out, you take a small hit, but your opportunity for reward is quite greater. Coming up into that 52.50, 52.51 area right over here. What else did I? Okay, and then the last one is the technical analysis cannot predict price moves. It is a tool to help the forecast price trends. And that's just to understand that, hey, this is important to know that if you're celebrating your prediction, you should be just celebrating, hey, I made a forecast and I traded my forecast correctly. But you should also celebrate that, hey, if I made a forecast, for example, if I made a forecast that I'm going to play this stock for a trend continuation, yay, I was right. Am I going to celebrate that to an extent of like I'm some sort of genius? No, because I would be still happy if, hey, I forecasted a breakout. So I'm going to enter in this breakout and continuation. But if it goes like this, I know where my risk is at. And I'm going to celebrate the fact that I stuck to a process and I got out when I'm supposed to get out. And if it turns back up and sets back up, I can always re-enter. VIX is putting pressure on the upper weekly band, bottom Bollinger Band. Yeah, it's made a pretty decent move today. We'll take a look at VIX. We'll take a look at VVIX. Yeah, VVIX reaching up a little bit. Skew ends up updates at the end of day. VIX. Yeah, VIX is firing off today. I mean, not crazy, but it's making its move, right? As volatility contracts, it's also expanding. Go figure. Whoa, crazy, crazy, right? Crazy. So in terms of the whole ICT thing, like I don't know it enough to like really like critique the ins and outs of it. But from what I've seen and what I've heard people talk about, it's like, bro, it's just like support and resistance. Like that's really it. And then, coming into certain areas, but there's so much jargon involved and you don't need to know the jargon. What you need to know is the principles and understand what technical analysis really is, what you can control, and then you move from that area. You can look for the best indicators. You can look for anything, the signal charts to help kind of get a good, bigger picture. But the execution, at least for me, it comes at a time where you really have to pay attention to market conditions, right? Market conditions and then periods of contraction, breaking into a period of expansion, right? Where can you find this book on trading? It doesn't exist. I made it. I mean, it exists on my computer and that's about it. And I share some slides every once in a while. I still don't know if I'm going to share it or not. It's my little, I was planning on recording it and putting it out there, but I'm not going to just share the slide deck because it's going to get misinterpreted. All right. There's a magnet over here at 517 for the SPY. So if it comes down, 517 could be a level right back down into here. Market net flow is still and is waning once again to this convergence. It's just nothing interesting going on right here. This will allow me to kind of just know to not be too involved in the markets. This tells me, do I execute into this? Do I wait it out? And to me, all right, I just wait it out. I just chill. All right, let's see how it plays out. And if anything sets up, Maybe I can add more exposure into the market. You know, I've thought about creating those like a bot or something like that, but I don't know. I'm much more discretionary trader because there's a lot of aspects into it, and I wouldn't even know the beginning part to like putting something together like that. It's just complicated. Or maybe I have to do multiple that work with each other. And then writing a book. I'm not much of an author or a writer. More of just a free speaker. I just speak. Yeah, no. Yeah, no. Sell it as a book. I don't know. Maybe one day. There was some stuff in there that I wanted to clip, right? It's still, there's some stuff that I want to add, and there's some stuff that I want to clip in it. And the reason why that I want to clip things is because a lot of the stuff I don't really necessarily need to talk about in depth. Like, I don't need to explain what the MACD is, in my opinion. I don't really need to explain the Fibonacci because there's so much information about that. I can explain maybe how I'd look at it and use it, or how you can visualize it. But you don't need to understand the like, for example, like oscillators, right? How do you trade oscillator? Like, a lot of people read oscillators wrong. Like, for example, like the RSI. Oh, it's an overbought condition, so therefore I get out of it. It's not actually the case. Like, if you think of things as like, because if you know what it's actually measuring and it goes into overbought conditions, and you think of it in terms of like elementary school grades or middle school or college grades, when it's actually an overbought condition, it's telling us that it's very strong. So you're getting actually an A+. And I mean, if you were to bet on a student, would you be betting on students that make A+, or would you be betting on students that do Fs, right? In overbought conditions, right? So that's not really how I would perceive it. What I'd look for is, you know, price action, or for the RSI to make bearish divergences and or bullish divergences to price. And then that gives you a little bit more of a signal. It shows that, hey, the strength of it could be weakening, but it's not something necessarily that's like an execution, like a signal to execute, you know? And I think that's more valuable than understanding like the calculations, the mathematics behind it. And even when it comes to patterns, like we were talking about ICT, how it seems like it's just a bunch of stuff to repackage, right? You gotta understand what was prior to ICT, right? There's traders before ICT that were successful, right? Or any other type of thing. That's why I'm saying the principles are so important. The principles of technical analysis. If you study the history, then what happens is you take the history and then people pull things from it to create their own strategies, and then they repackage it, and that's just how it's always been. That's how it's always been. I mean, you could even look at like the Bible, right? There's so many different aspects of a Bible, and people built a lot of books that are written are pulling from information from there, right? You can look at you know, money, right? Money, books on money, books on finance, books on self-help, books on all this stuff, but yet it's taking content from somewhere, repackaging it in a way to produce new content. That's all it is. So that's why when I say like, okay, like I have this trade that I like doing called the U-turn, like, because price can go, like, for example, right here, right? Well, it'd be more like, what would be a good example of the U-turn? Basically, a U-turn for me is like I anchor it on to, you know, there's an anchor VWAP or something hanging around, and price is basically, say there's a level of support right here, and price is coming down, right? Maybe price look like this, and it's coming down into this area of support. Sometimes I'll just say, hey, look for price to make a U-turn through that and come back up, right? Or make a, you know, a higher low, and then buy as price starts to make a U-turn. Well, other people will call this a undercut. Other people will call it a back through trade. Other people package it as right side of the V trade. It's the same thing. It's literally just repackaged differently. The same thing, right? To make it seem as if they like created something new, right? They didn't. They didn't. It's the same thing, right? Same thing. And people have a problem admitting to that. I don't know why. I don't. It's all coming from just the basic principles of technical analysis. The burrito strat. Like, you know, the the strategy, like you can make new strategies. So for example, like the Holy Grails trading strategy, that's utilizing multiple aspects. It's really just a pullback trade, but the strategy itself incorporates a couple of indicators to give you the idea of when to execute. So if you don't know that trade, you can look at Figuring Out Money, Holy Grail, and that goes through, you know, where the trade idea or where the trade strategy came from, and how to execute on it, which is a great way, a very simple strategy. False breakdown. Yeah, false breakdown. There you go. Bear trap. There's some more names to that one, Jay Haas. Oscar, yeah, I did talk about mining stocks already a little bit. I'll touch back up on it. So GDXJ is obviously the junior miners, right? Junior miners, and these are obviously more volatile. Just know that GDX, right? So this is the thing, man. Take a look at the chart of GDX. Take a look at the chart of silver. Understand that correlation right there is darn near 1-for-1. So if you're bullish silver, you can be bullish miners. Now, silver is a higher beta to gold, and miners are a higher beta to silver. And the correlation is pretty strong between silver. Like if I overlay a chart of miners, this thing is like a 1-for-1 basically. It's crazy. So silver's popping off here. You look at GDX or GDXJ, right? Started off much higher on the day, coming back down to the lows. What's GDX doing? Right? Coming up higher on the day, getting back more towards the lows. After a consolidation and a breakout, look at silver. A little bit off the lows after consolidation and breakout. So this contracted, then we expanded. So when I look at GDX, or GDXJ, we'll say, because that's the one you wanted, it's already made a very aggressive move, and now it's garnering a lot of attention. Now it's garnering a lot of attention. So I don't execute where the attention's at, or into a prior area of supply, right? Now I wait to see it consolidate. I don't care if it goes up to 41 or 42 and goes into a straight line, because it will consolidate. It's not about buying, you know, the lower price. It's about buying the right price in terms of risk and reward. And then we talked about, if you look at the weekly time frame, so we'll go to GDX, or we'll look at silver, right? If you look at the weekly, this is where it comes into like different time frames for different people. But if you look at silver and you're bullish silver, this could be early in the trade from a longer perspective, because you look at this and you're saying, hey, it's breaking out of this very long-term downtrend, and you'd be right. So your target might be significantly higher in the price of silver. So that means over the course of time, miners could be significantly higher as well. Okay? So weekly perspective, you know, it gives you an idea where you can potentially have, you know, your risk, but just understand, if you're trying to execute on like a daily perspective or make it shorter term, well, then look at the shorter term charts. If you're trying to invest, then yeah, and you're going to be holding it for years, then I don't think the day-to-day consolidations and the drawdowns should bother you that much until you actually get a significant hit to the downside, stopped out. That's kind of what how I would look at that. Okay. Remember, there's no right or wrong way to do this. There's your way and what you choose to do. Right? And when you're wrong, be wrong quick. That's it. And Tesla's down 5% on the day, 6% almost. This thing is just been getting clobbied. Was looking good yesterday, as it like we could potentially break this little downtrend. Nope. Now it's kind of forcing this little bear flag here. Go figure. I mean, you get this bounce up, right? People get super excited. Even this move here, people were getting super excited. And we actually even talked about how it can be bullish looking, but then how to keep an eye out for the bearish structure. The trend, like respect the trend, right? So if this broke the high of today, I probably would have taken a small shot, but it didn't. It broke the low. So am I taking a shot down here? No, I don't care to. And it probably is going to bounce back up to here. But like I said, I don't care because it's expanding. I wait for it to contract. I wait for something to happen. I can go into the 15-minute time frame and be like, oh, there's a positive divergence. It's coming down, broke this high, and then maybe trade it intraday for a little pop-up. Cool. That can work, right? Boom. Little pop-up to this prior high, potentially higher. But that's a different time frame. If I'm trying to hold it overnight, which I'm not right now, so there's multiple ways to look at all this stuff. Silver stocks. I mean, that's kind of like looking at like the miners. They're so close together. Like, what's one of the silver miners? Like, what in Helka silver miner, right? I think. They're moving kind of like very similar. Right, so consolidation, we broke out, strong moves. Now look for the consolidations, right? I don't chase any here on a new entry. I wait for the consolidations on the daily time frame to play a continuation. All right. Like I said, I don't care if the prices go higher on these and I miss moves because, I mean, if I showed you the P&L curve again, my P&L curve, I didn't trade most of 2023. Most of 2023, right? Most of 2023, I was just earning that 5%. And then I got incredibly more aggressive into this range. So what you'll see here is the price actually came down to basically not too far off of the start of 2023 on this 10% correction. And then all of a sudden, right? So I gained, you know, like this. My portfolio looked like this every month, right? Because you get your little payday. And then when I played here, it went down a little bit further. And then now the P&L curve just went like literally like a rocket ship. Where this move on S&P 500 was up 27%. The Qs went up, you know, 30%-ish, right around there. And then, you know, it was up 60%. Playing individual names and not even having max exposure. That's the power of trading individual stocks. It can work for you and it can work against you. Tesla had some bad delivery numbers. Is that what's going on with that? I figured there'd be some sort of news. Can I look at Hershey? Yeah, let's take a look at Hershey. It's been a second there. Yeah, Hershey's just trending sideways here. A little choppy here for Hershey's, man. Like I mean, could be the shakeout period, right? This was just a monster move, just horrible trend to the downside. And now we're starting to see some higher lows. Could be that inverse head and shoulder, could be building out a base, right? Earnings right here blew through it, and then we came back down, potentially creating inverse head and shoulders pattern. But now I like to see price tighten up, but we're still below a declining 200-day. So if this wants to start flattening out, if we want to start breaking back above, perhaps, you know, look for something like this to take place on something like Hershey. But yeah, this thing came far and fast to the downside, and now finally it's starting to move through potentially a period of accumulation. If you look at the weekly time frame, you know, it's still, you know, butting its head in a clear downtrend as the shorter time trend is trying to turn itself around. These, like I said, trends don't go down without a fight, right? They fight. And the fights, both from the upside and the downside, meaning periods of distribution and then periods of accumulation, right? These periods are turning points in trends. That's why, you know, accumulation, distribution, when you look at it, there's very choppy price action. So when you start getting very choppy price action, it could be the trend fighting right now, consolidating or potentially coming to an end. Look at Nvidia. Okay. What was one key giveaway that we talked about on Nvidia? It was this day. This day, right? Strong move up, parabolic type move. Then all of a sudden, huge volume came in engulfing the prior days. Now, we didn't say, oh, that's the top forever. What we said was, this is probably where it starts marking a period of consolidation. Potentially a pullback, potentially consolidation, but that right there is a tall tale sign that we can get some volatility into the markets. Now, does that mean that this is going to be the high for sure? No, I mean, chances are we'll come for 1,000 at some point. And looking at this, what would that look like? It would go like this. If it got to 1,000 and then came back down, then people are going to start saying, oh, it's a head and shoulders pattern or it's advanced head and shoulders pattern. But that would still potentially be a big consolidation. Even if it went up to 1,100 and then it comes back down, right? This is going to be a key level, key day in Nvidia, given the context of the candle, the range of the candle, the volume of the candle, and you can see that it's already telling us something important there. Now, as I'm looking at this now, right, we consolidate like big range, contracted, we saw it pop up. It's actually contracting again here, right here. So if we start breaking back above the 20-day, I mean, this pops us right back up, maybe to retest this high, right? The trend just don't go down without a fight. They don't. They rarely do, right? They rarely go down without a fight, especially the bigger names. If you're talking to little penny stocks that just dump and you wake up and it's down to zero the next day, whole different story, right? Hey, what's up, Rob? Rob's been following for a long time. He's always kind and on the comments. Appreciate you being here, man. Thanks for the follow, Zach. Yeah, so somebody's mentioned Baba consolidation. I like the looks of this. Yeah, it's very similar, right? We talked about this one for some time, but it's going sideways, right? Now, China equities, I mean, you can wake up and they can be way down. You can wake up and they can be way up, right? It's always, you always have like, what's going to happen? What's going to happen? Now, this is heavily traded in the US, very liquid name, but even so, you can get these big, like choppy moves. So yeah, is this basing out? Well, we're below a 200 day, right? It's still declining. It's been going sideways. So this could very well be, you know, the trend trying to change itself. And various names in China are looking really good. This is one that I've been pretty bullish on, DIDIY. I got shaken out of it again. Like it doesn't stop, right? It just does not stop with me. It was looking good on the breakout. Like I play this from here to here. I play this, I got shaken out here. I played it from here into here. And then I got shaken out. And then I played it into here to here. And this day shake me out again. I'm like, are you kidding me? It's literally been getting paused up here at the $4. All right. And I feel like it's going to break here at some point. I don't know when exactly, but it would be nice for it to tighten up just for a few days and look for the re-entry in DIY. But yeah, this is like the Uber, but in China. So yeah, there's a lot of names that look good. This is one that I like. I like Baba. And then I showed like K-Web, right? K-Web is in a downtrend, but price tightens up and we played the breakout here. Now it's moved. Now I'm taking profits on some of that stuff. I didn't trade K-Web. I traded YANN for shorter term. Don't hold. You know, it's not smart. Well, I should say, be careful if you're holding leveraged products, right? The derivatives, like for example, YINN, because there's decay over time, right? It's like TQQQ, right? TQQQ or your SQQQ, right? Just understand that when the trade's working out, great, but just be aware that those are more trading vehicles, not incredibly long-term vehicles. Eventually those Ed Hardy t-shirts. When's that Ed Hardy going to come back into play? MSOS. Yeah, marijuana stocks have been catching back up, catching back into the bid. Looking like it's getting tight up here too to retest this high. We talked about the change in trend happening here, right? And still looking good. Marijuana stocks, cannabis stocks look good, right? So look at how we went to a stage 4 decline. This could be a period of accumulation. Now the moving averages are starting to turn up. You can see we pulled in and we're moving back out. So that's it. I mean, these are good signs of moving into markup phases, right? The 4 stages: accumulation, markup. That's the early stage markup, distribution, decline. Look at ARC. Accumulation, markup, distribution, decline. I mean, that's clear as day, like, right? Is this a period of accumulation? Is it a, like, perhaps, she trades pretty frequently, and I think she just got into, like, Reddit. This actually looks pretty decent. We're seeing some weakness here, but if it can break this trend, that would be a positive sign. But now it's coming in a little bit. So no signs of the entry yet, but it's looking decent. Look at IWM. IWM is coming in, but it's also breaking out and seeing a high that we haven't seen for quite some time. People are getting very excited about IWM, but we have all this prior supply, to obviously fight through. On the daily time frame, just look at this volatility, man. It's down 1.98% on the day. And so I remember I saw it on Twitter. Oh, but we're getting the breakout. Here it is. And I'm like, yeah, I'd like to see it pull in and tighten up again. Like there was no side, like there was nothing that said, hey, it couldn't happen, right? So these moves are, if the trend is really going to change and we're going to start moving up, this is actually quite common to get these big shakeouts. It shakes people out, and then it goes on a move that gives us like no pullbacks, right? And then it just goes and goes and goes. And then it goes through a bigger period of consolidation. The way you approach that this is why I don't like to take huge positions. If I take a little 5% entry or starter position just to get the feel of it, I can add into it if it keeps consolidating, or if it breaks out, I can add into it, and you go from there. Trading Guru wants to know about Tesla. Yeah, I just talked about Tesla. So Tesla, I mean, it's in a downtrend, right? And we have earnings right around the corner. I don't know. This thing is probably going to make a move where it snaps back like crazy, and everyone is going to have caught it perfectly. The trend's down, right? So yeah, I'd say you can play like short-term pops, but just careful. This is actually trading now like actually a like an automotive company. Long term, if you look at the weekly chart, like you know how we talk about accumulation, markup, distribution. I mean, accumulation, markup, everything goes into an incline. Boom, you get this blow off move. This could be distribution here. And now take a look at all these moving averages over here. They're starting to curl back around and trend down. So this could be the early signs of a decline, even if we get a big pop up. Now, if you look longer term, what would be the important trend line to break for Tesla? I mean, look at this. Right here, connects to here, connects to here, connects to here, connects to there. Literally lower highs, lower highs, lower highs, all the way through and through. So if you're bullish Tesla, even if it comes back up to here and everyone's like celebrating, that would just be another lower high. And the trend could still remain to the downside. You'd want to see like it to start going like that and then eventually tighten up and break out of this trend. And you look back to the left of the screen, you're like, dude, this could be the move right here when you have your stop losses like so. But right now, I mean, it's I guess like pulling into, you know, this lower area. It's in a down channel. It's in, you know, bearish context. It's kind of extended to the downside. Maybe perhaps if we see some sort of rotation, we get a little bit more of a pop. It just hasn't happened yet. It hasn't happened. Look to the left of the screen. I remember like there was so much hype in Tesla from an options perspective and anything. And people were like going crazy buying it up here at 300. And then it gets clipped like crazy. And then people started buying it again. But you look to the left of the screen, Tesla hasn't gone nowhere since 2019. It's been going up and down and sideways. That's crazy. It's pretty crazy. It's a great trading vehicle. It's a great trading vehicle. But right now, as far as an investment vehicle, I mean, look at the trend. Don't look healthy. I don't know what to tell you. I don't know what to tell you. If it looked different, I'd tell you it looked different. It is what it is. Yeah, Glenn is saying that he can't see. I mean, that was a dead giveaway too, you know? He can't see a Tesla moving up until Powell cuts rates. Dude, Elon Musk was publicly announcing that it wasn't smart to have rates where they are. Elon Musk, the CEO, right, is straight up saying like, hey, higher rates hurts companies, right? That's not a good sign. Like, and we know this type of stuff. Why? Because when rates are high, money's expensive. What is automotive vehicles, what do they thrive off of? Debt, right? So when debt becomes more expensive, what happens? Well, that's not good. It chews into their revenue, chews into their margin, chews into all types of things. And they're trying to be innovative, bring out new technologies, all kinds of different stuff to get the hype back in. And you know, it's a name, and you can see this throughout history with all types of different retailers. Right? I have an IWM chart that I share frequently, an XRT chart, which is retail. It's not the greatest proxy of retail, right? But look at retail coming in here. But higher rates and rates higher for longer, it encourages savings, right? Not spending. Because when you look at stuff like automobiles, when rates are higher, it's more expensive for the consumer as well. Not just the company for their debt, but it's more expensive for the consumer. So when debt's more expensive and people can't afford, you know, the car, which they probably couldn't afford the car in the first place, they can afford the payment of the car. And when you can afford the payment of the car, that means when the payment gets more expensive, they really can't afford the car. When credit card debt becomes more expensive because rates are going up, which are at their highest point for a while right now, 25, 30% interest rates, guess what? The debt becomes harder to service, harder to manage if it gets out of control. And that's why we're seeing things like delinquency rates, like 90-day serious delinquency rates tick up. That's not just me saying it. You can pull that information from the Federal Reserve. Once a quarter, they launch that data, and you can see upticks in that. It's not like crazy out of control, but it is important to call that out, right? We had somebody, an author pull out recently, and I commented on it. Let me see if I can pull it up. Like, this is the most, and this is crazy to me because, like, he's smart, but it's like how you perceive things. Let me see if I can find my response to this. Incredibly smart, but the way that the data was positioned is very misleading, and it can be misleading. That's why you have to approach things from like the edge of a coin, right? You know, you have like Robert Kiyosaki says, there's heads, there's tails, and then there's the edge. And I like that saying, that quote, because you can look at things from both perspectives. You're standing on the edge and looking at both sides, the bullish side, the bearish side, the good investment, the bad investment, the good personality traits, the bad personality traits, and you're weighing it. You're not just focused in on one single thing, all right? Let me see where this is. Mark Minervini, what's the best trading advice you would give in just 4 words? What would be the best advice you would give in 4 words? What would you guys say? So Mark Minervini is also a good trader, technical trader and so forth, and he has this thing called the volatility contraction pattern. He quite literally, I mean, that's literally just one of the basic principles of technical analysis. When we talked about repackaging things, it's basic, and I mean, you know, volatility contracts, right? Okay, yeah, that every equity contract, like all markets, all assets to some extent move through periods of contraction and expansion. But again, if you want to take it to another level deeper, people will argue with me on like patterns, like that's not a bull flag, that's a pennant, dude. Like, okay, what is it actually? It's a market that's moving between expansion and contraction. Expansion and contraction. Expansion to contraction. Expansion to contraction. Expansion to contraction. Everything's repackaged, people. That's why it's so important to just understand the basic principles and not to try to find all these other things. Because you'd be on a search and you search forever. There's going to be unlimited amounts of ways to position things, unlimited amounts of different strategies. Once you understand the basic principles and you understand, hey, my strategy works in specific market conditions, you have an edge. All right, what was I doing again? Let me go to replies. Let me take a look here. Take a look here. Dude, my chest still hurts from doing that push-up exercise on Twitter. Y'all killed me. If you involved in that, I said basically if I get one, for every like I get, I'm gonna do 2 push-ups. And I had to do 317 push-ups. I did it in 3 hours. And my arms hurt still. It hurts. It hurts. I know I responded to this dang tweet. Where is it at? Dang, Daniel. Okay, here it is. Okay, so here was the tweet. This is nothing bad against this guy because he's an author, has a good book, keeps it really simple, makes sense. But let me just tell you the kind of the context here of why I think that certain data is invaluable. So over 500,000 views, got a lot of attention, about 1,000 likes. Want to know what the median credit card debt in the U.S. among credit card debt is among U.S. households? $0. So this right here is a blatant fact that we're pursuing, right? So want to know the median credit card debt is what's the median credit card debt among U.S. households? They're saying that the median is $0. Okay, so okay, cool. Let's prove it. Okay, so while some struggle with credit card debt, this isn't the case for the majority of Americans, even if the headline suggests otherwise. That right there is a clear sign that you got to be very careful. Because if the headlines, what headlines are you talking about? Are you talking about other data sets? Are you talking about just a random headline that's not supported by fact? And then we asked, where's the supportive evidence? The supportive evidence is this: the survey of consumer finance. It took me 2 seconds to see that the source was from 2022. The source is from 2022, and the source is a survey of approximately 6,500 people. So one, it's not looking at actual debt. It's looking at survey statistics of only 6,500 people. And they said the average on that the little thing. So where were these people surveyed from? Where did they come from? But 6,500 people, and you're saying in the US as a like, that's crazy. All right. So that, to me, I think, what was my response? I think my response was, because I was really curious. I honestly was. But then I saw the data. Just to clarify, the source is from 2022, and it's actually just a survey of approximately 6,500 people, correct? Is there actual data beyond the survey that supports this? Or did I miss it? I mean, you tell me. It's not something that I would really read much into. All right, what are we doing for the day so far on the S&P 500? We're just floating around sideways, still to this second, down about 1%, right? We broke out of this little thing. We're just floating around the weekly expected move. All right, so if you've been here and you've been watching the stream, hopefully, if you're day trading, you understood that this is, we talked about how this can just be a choppy area in and around where we currently are. Market net flow, we don't really have convergence here. It's kind of waning. Looks like it could potentially uptick, so maybe perhaps we get another leg down. It's a little too early to tell, but there's a bearish divergence between the red line, the green line, red line being the cumulative net premiums for puts, green line being the cumulative net premium for calls. Okay? Take a look at some zero date levels, see where we stand. 5,200 is the put wall. It was kind of moving between 5,200, 5,190, and then 5,180. So we're back to these levels, which we drew out here as potential floor for the day, unless if it really dramatically changes. So right now, dramatic hit, negative gamma territory, sitting around these zero date levels, this zone of gamma. When we're in negative gamma territory, when we're below a 5-day moving average, that could potentially decline. The longer it stays down here. What does this tell me from my perspective of swing trading? This is where I go, not necessarily on defense, but this is where I don't really start to look to add much. If I start getting clipped on my positions, I'm going to respect that. This is telling me that the market conditions could be changing. Could be, right? And we're seeing the early signs of that. Below a 5-day moving average, it's still neutral. It's not trending down yet. And then we're in negative gamma territory. And that could change overnight. And it's okay that it changes overnight, because it doesn't mean that our positions have to fully change. It's just the way that we approach the markets. The way that I approach the markets can change. Okay? Who's enjoying the stream so far? Anybody? Hopefully you are. Spend a lot of time doing this stuff, man. Trend is your friend. Trends do not lie. Cool stuff. Adolescence is a beautiful process. Always, Mike. Thanks, AA. Thanks, 69. Conquer. Appreciate it, man. Yes, N. Games Dean. Okay, yeah, so Games Dean, first time chatter up in Twitch, said he mentioned that this is not even a close enough sample size when comparing the population to the United States. Thank you. I know. It doesn't take like a genius to understand that. It's not a big enough sample size. That is like, that's the city of Loomis. Have you ever heard of it? I grew up in Loomis, California. Tiny little country where people ride horses and churn butter. All right, it's not that country. Okay. 6,500 people. I go out to Rockland. Rockland is like 20,000. You go out to Sacramento, hundreds of thousands. Right? 6,500 people. Get out of here. And a lot of the time, what would be, if somebody has like $500 in credit card debt, but they have a $20,000 credit line, who's to say that they wouldn't just be like, no, I don't have credit card debt, right? I typically pay it off. Sometimes I don't, right? I mean, if I pay my credit cards off every month, but if I had a balance and I saw that as a question, I would probably just say I don't have any credit card debt. Even if it rolled over or whatever, if I had some at that time. All right. Bow, 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 bow. Hey, what's up, Let's Set Match? Hey, you're in the YouTube. You were over at Twitch, now you're on the YouTubes. Thanks, Traybor. Mark's loving the live stream, thank you. Thanks, Mark. Oscar saying that he's eyeing AI. Looks like a great buy here. What AI stock are you looking at? Or are you looking at AI itself, like the ticker AI? Hey, what's up, Quantum? Hey, Quantum Indices. You've been following the channel for quite some time. I appreciate it. And you always drop by and you leave kind comments. Thanks for being in here, man. Appreciate that. Familiar. I can see some familiar faces. I still don't know what AI stock does. Are we talking about like a specific AI stock right now, or are we literally just talking about AI? Like isn't there the ticker AI, right? I haven't traded this one. Let's take a look. Let's take a look at AI. Look at XRT, man, getting cracked. Oof. Holy moly. I mean, it's just, dude, how volatile is this thing? This thing moves, man. I can see, yeah, it's like when I look at this, it's like, yeah, would I short here? No. Would I go long here? Does that, just because I wouldn't short here doesn't necessarily mean I'd go long, but I mean, seeing a bounce here in the near future could make sense, right? You got to be, when I look at stuff like this and things are moving down in a downtrend and you're trying to fade, like this would be a fade trade, right? You're fading the move down, or if it was moving strong, you'd fade the move up. Those trades, the way that I approach those trades are incredibly more aggressive, meaning that they're typically smaller position sizing for one, but I'm in and out of the position incredibly faster because I don't like holding on to that. I'm way more comfortable, my personal opinion, right? How I trade, I'm way more comfortable holding things that are in a positive trend. So if it breaks like a certain area, I'm like, okay. But is the trend fully changed yet? Yes or no? And then I can always look to re-enter. So it doesn't like bug me as much. It's not like, I don't need to sit there and like bite my fingernails and hope that it moves up a little bit just to get out fast. So yeah, I look to here and yeah, you can get explosive moves to the upside. You can try to catch it, but you can get explosive moves to the downside. This thing could open up down here tomorrow and you're like, no, and you get out and then just rips like this. Like that's how volatile. I mean, look at that candle. All right, that basically did that. It gapped down and moved right up. I got shaken out of so many names. Now I'm kind of getting to the point where it's like I don't care. Like I'll look at the beta of the name, I'll position size it, I'll size it up and say, hey, if this next, when you enter in a trade, what's your second trade? Your second trade you should know before entering into your first trade. What do I mean by that? You should know where you're going to be getting out or where you're going to take profits or both, right? Understand what your second trade is going to be and have it clearly defined, because if you're trying to figure it out after the fact, you're going to let weird things happen, right? You're going to re-question things. You're like, oh, should I hold it here? Should I hold it there? No, just make a decision and move on. It's a piece of inventory. It's going to be very hard to make a decision and move on if it's too big of a position size, though. If I go 60% of my portfolio in one trade, yeah, I will be biting my fingernails and not sleeping at night. 20% of a high beta name like this, I wouldn't be able to sleep at night. 10%, I'd be fine sleeping at night. But still, you get what I'm saying, right? The beta of this is pretty wild. Actually, so if this is down, what, 2.95% today on this move, 10% position, I'd be fine. I'd be fine. But still, I feel more comfortable on higher beta names, 6%. And then moving up, scaling up into it if it's working out. Yes. Yes. Bitcoin selling off. Is that what's going on right now? Let's take a look at the BTC, the BD Shamidi coin. Yeah, Bitcoin's coming off. I mean, could be an opportunity, honestly. I mean, we're just pulling back. We've seen pullbacks and we've seen rips right back. I will note that the sailor to ship tool is going into the negative territory, but you know, it's only Monday. Well, I'm sorry, it happened on Monday. It's only Tuesday. So we have all the way till whenever Bitcoin candle closes. I think it's like Saturday or Sunday for the weekly candle. And then that, if it closes in the negative territory, that would be technically the sell signal. And then you have to wait for price to cross below the prior week, which would be the official sell trigger. Now, I want to reiterate this. That is just the way that I approach it. I know people that use smaller rate of changes, so they get more whipsaws, but they catch the move earlier. And I know people that look for just turning points in the rate of change, which we got over here. And extensions in the rate of change, right? My strategy on it is not an end-all be-all. I literally just put it together because it can help identify things. That's it. That's all it is, right? But there's other people that can build on that and change it up, and that's totally fine, right? So yeah, it's coming off a little bit. Look at something like IBIT, right? Isn't IBIT the ETF? Right? When you look at something like this just from a technical perspective, yeah, it's coming off strong, okay? But trends don't really go down without a fight. This low connects to this low. I mean, that's pretty close. I mean, what if it does this? Would you be interested if it goes like that? And it starts breaking out? I would. This comes down, starts crossing back around. I mean, you don't know what's going to happen, right? You don't know what's going to happen, but chances are you're going to get another pop at some point. And if it is bearish, I mean, it'll create another lower high wherever it bounces to. And then when that changes, you look for that high to be broken. Sure, if it comes down like this, then we have a lower high, lower low, and you'd still have to wait for a potential bounce to create a higher low or, another lower high. So you can then look at it as a period of consolidation still. There's a lot of ways to interpret it and kind of forecast a potential price move. Yeah, there's when's the halving again? There's a halving coming up or something like that, right? C3AI, yeah, okay, yeah. That's what I figured was the stock we were talking about. Yeah, Mark is pointing out that it could be a double top. Yeah, for sure. Yeah, and Nvidia too. So let's talk about that, right? So double tops. Okay, it's technically a double top when it breaks the area. So yeah, high, it's close enough to consider it potentially a double top. So it'd be considered more actually a double top when it eventually breaks, and then you would take that move and expand it to the downside as the potential target. That would be the technical measurement of a double top, which would bring us back into this period of consolidation. Now, if it's a strong move down, I mean, we've seen things like this happen, right? So just be aware that on the double top, you're basically playing a 1-for-1 here, right? Or you wait for it to bounce and then you short when it's another lower high into it. So that's would be it. And Nvidia, all right, double top, right? Is this the biggest double top in the world? Maybe. I don't know about the world, but in the S&P 500, right? As far as the larger market cap names go, with high implied volatility, top. So if it cracks down to these lows, we'll look back. I mean, and it goes like this. I mean, we'll look back and be like, yeah, it was such a clear double top. But right now, I mean, it hasn't cracked there, and right now, price is just kind of just going sideways here and coiling up. If it reclaims this 20-day and starts moving back up, I wouldn't be shocked to see Nvidia back up in here. That's possible, right? Hasn't proven that yet, but I want to take a look at Apple. Apple was roughly around that 170. Look at this. Check this out. The market cap between Nvidia. So Apple is 2.6, Nvidia is 2.3. Man, if Apple did crack 170. That was that level we were saying, be careful here. So this would be an idea for a U-turn trade potentially. So Apple, we were watching the 170, right? First it was the 180, came back up, right? Produced a lower high, right? People got excited, it was awesome, and then it got clipped again to create another new low. So another new yearly low for the price of Apple, breaking under that 170. Not a great sign, right? So now if price just undercuts this low and turns back up, tightens back up, maybe it does produce a pop. But it's also in a downtrend, so you got to be a little bit more tactical in the approach here. But not a good look there. Not a good look breaking those levels. It's crazy. It's crazy that the correlation between Apple and the S&P 500 have been pretty strong. But this year, Apple's been breaking down, the second largest market cap name, and the S&P 500 is holding up because of various AI stocks, right? Nvidia being one of the bigger ones. The markets are really moving on that. I mean, we've seen strength in like things like Microsoft coming off the lows, still holding up well. I took a position right here. I'm probably up slightly on the position. Looked good yesterday. I was even considering scalping some off, but the position was so small relative to the portfolio. I said, I don't really care. I'll just hold it. Google looked really good on the breakout yesterday. Now we have an inside trading day. So Google look at tight consolidation, follow through with a nice breakout on decent volume. And now we have an inside trading day. So now it's consolidating that move. So Google's still holding up well. Meta's holding up well. A lot of these names are still holding up well. All right. S&P 500 approaching its lower weekly expected move again. Is it going to clip to a new low of the day? We'll look at market net flow. It does suggest it very well could, given the context of how we are into more of a bearish convergence here with the bearish divergence. So once again, this has told us all day to be very careful trying to buy this dip. Was it right? I would say yeah. Because a lot of people expect V recoveries, and it could still come at some point, but it just hasn't. And what gave us that insight? This. Should you go long Amazon for its all-time high breakout if tech is down? I mean, I'm long Amazon, but I'm not making a big deal of it. You know, I'm not making a big deal of this. And it looks like I've been chopping around in here, right? I'm basically up on the, I think I'm up really slightly on the position. It's a bullish consolidation. If it starts clipping and breaking low, I'm out. That's it. Very simple, but it's holding up rather well. I'd like to see it just actually have a day like Google and break out and move. The target for me was looking at double of the consolidation, right? So it's consolidating right here like this. So a technical measurement of a break of that 180 could maybe move double, right? Like that, which is basically a 188, something right around there. So that's what I was looking for. That's why I have a little position. I mean, if it starts breaking under here, I'll probably just get out of it, or breaking under this low. It was an early entry for a potential speculative breakout. Just going sideways. You know. Another piece of inventory. Don't read much into it. Alan. Yeah, Apple has some serious headwinds in China, which it's funny because I'm like tiny violin for my Amazon trade. Seriously, bring out the tiny violin. I don't mind having exposure in some of these larger market caps because of the trend. All right. But as soon as it goes against me, I'm out. I'm out again. I'm going to take a look at Market Watch here. Dang, look at, man. This is a red day. 83 declining stocks, 18 advancers, GE. Dude, what is up with GE? Like literally, what is legitimately up with GE? What am I looking at here? What the heck happened? Was there a split or something? No. Wait, what? What's going on here? Why am I tripping out? Was it a... Oh, they spinned off their company, so something happened. Okay. I'm like tripping out here. I didn't see the news. Yeah, well, what's going on here? UPS, so energy names, Duke, some consumer staples. Oh, triple split. Is that what's going on here? G had some type of split. Okay, yeah, I figured there was some sort of something. What do you say to the cocoa futures, cacao futures? Testing the 5 DMA today or more. I don't touch that stuff. Especially on moves like that. Like what was going on with it, right? So it was a FinViz, right? FinViz. I don't know how to pull up on Thinkorswim. If anybody knows how to pull up Cocoa futures on Thinkorswim, let me know. Is it just CC maybe? Is that what it is? I really don't know. I've never pulled it up on Thinkorswim. Can I pull it up on Thinkorswim? Oh! Oh no, I can't find the symbol. I don't know. Yeah, so I mean that's crazy. That's crazy. Yeah, so it's pulling back into maybe probably a rising 5-day, but the dang thing is never vertical, right? These aren't the parabolic moves. I don't touch. I don't touch parabolic moves. If I am touching it, not in the futures market, it'd be such a small position. It'd be I'd look to fade it or potentially look for consolidation for a very short move higher. But I don't really get too involved in that kind of stuff. I just don't have the risk tolerance that a lot of people do. Remember, if you weren't here earlier, right? I was talking about like if you just focus on 2% a month. I mean, make your goal easier, but when you look at the long term of 2% a month, that's 24% a year, right? Yeah, and maybe there'll be a month where you're down 6%, 5%. If you really are managing and keeping it close, you don't want more than a 5% down month. I mean, it depends on your portfolio size and how hard you go, but in the investment world, right? If you're like trading for a fund and you take their portfolio down 5% from changes you make, that's a big deal. In a month, that's a pretty big deal, especially when you're competing up against, your benchmarks. Unless the fund allows for that type of volatility, right? Or if the money that you're managing allows for that volatility, then I guess it's a little bit different of a story. But the more you go into the red, the harder it is to gain back, right? If you're down, like roughly, if you're down 10%, right? If you're down 10%, to make that back, you need to be up plus probably around 11%. But remember, the more that, because they work like kind of against us, if you're down 50%, you need to go get to 100%, make 100% gain to return to just come back to break even. So as you lose more and more, it gets exponentially harder to gain it back. So one way that I approach this is like so, right? I look at market conditions, and I show this a couple of times here, but I'll revisit it. When the market's working in my favor, I'm adding to positions if market conditions are good, and I'm getting trades that are working out. My goal is to exponentially add to that and trade while it's working out. But the moment that it starts working against me and market conditions change, market conditions being the 5-day moving average, right? For one, the shorter term, and then negative gamma territory. When I start getting clipped out, my positions start losing, but I don't start adding dramatically back. So my positions get clipped, and then all of a sudden my losses level out, smaller. So the goal is to trade more when I'm trading good, to trade less when I'm trading poor. All right? This right here is probably more important than any trading strategy. It's your positioning and how you approach the markets, right? Because it'll allow you to really exponentially grow your portfolio, and through the course of when things are getting better, your portfolio is getting better, things are moving up, but that you're managing risk in those times very appropriately too. Sounds easier than what it is. I mean, it's more of a mental game. It is actually easy to do. It is. It's just hard to execute. It's easy to understand, harder to execute throughout the course of time, I guess would be a good way of putting it. How did I go from working in a wireless company into finance? I've been in the communications industry for the majority of my life, for my adult working career. And then I finally landed in a wireless company, and I did a lot of just like marketing and stuff in there, and then in a way management, but not quite. I didn't really like the management stuff. I never wanted to really manage a retail store. That wasn't kind of my thing. I want to look at things from a larger perspective and how I can help more territorial stuff. So that's what I did. But during that time, I was still very fascinated with the financial markets, investing, personal finance. It's always been an interest to me. I just always liked it. I mean, I can go date back even further. I was thinking about it like from, you know, being at my grandpa's house, looking at the newspaper and looking at the tickers on the newspaper and seeing, like, looking at one newspaper and looking at the prior newspaper and looking at the prior newspaper and seeing changes happen. And it's pretty cool. It's pretty crazy that now it's so much easier to access everything. But that was a legitimate way of looking at things. Or making calls, right? And then I lived through the area of, right, like during 2001, right? I was younger, obviously, but I remember even, you know, in elementary school to middle, sorry, no, not in middle school, my teachers even talking about it. I remember, quite literally remember them talking about Cisco systems in 6th grade. And just people being hyped up on this stuff. And then 2008 came around, 2007, 2006, and I'm still very into the markets. Not to the extent that I'm at now, but just becoming more aware of things as like a younger adult, right? I mean, this is a long time ago, right? I'm 36 now. I'm talking about when I was 18, 19. And I just remember being around, and it was more like 2004, 2005, throughout kind of like high school, and then a little bit through that, I'd look around and I was just like, dude, how are these people getting all this cool stuff? None of it made sense. In my work, people were buying homes. How? How are they buying homes? I just did not, for the life of me, understand it. How are they buying these really expensive boats? For the life of me, I could not understand it. But what I knew inherently was something's wrong. Something doesn't make sense. And it didn't. And no one could explain it to me. No one explained it to me at all. No one could, because everyone was just living high on their supply. So when 2008 came around, when the actually great financials happened, I got to witness firsthand, things falling apart, stores closing down, everything shuttering. And I was like, well, this kind of makes sense to me. People didn't have their nice boats. People didn't have all their nice houses. People started losing things, and it was a very hard, difficult time. But that was also during the time where then I said, okay, now I'm getting into a career. Now I'm going to start investing. Why not? Right? Unknowing, beknownst to me that was around the bottom of the market. Like, I didn't know that. Is when I started my career, is around the bottom of the market. I was working at Verizon. Worked there for 13 plus years. And I just loaded into my portfolio because I had no expenses. 25%, sometimes 30%, up to 50% on some checks going into my 401k. They'd match 100% match up to 6%. And it would just blow through that thing. I would just load it. I just didn't have anywhere else to put the money. I wasn't making much then, but as the years progressed, right? Every year, 2 years, every year I'd get a raise. Every 2 years, I'd pretty much get a promotion. And that was like 6 years going in a row to make decent income there. Like pretty darn decent. Now I look back now and like thinking to myself, I'm like, dang, people start off way higher now. It took me a long time to get there. And then yeah, now I'm here. Now I'm here looking at markets, doing this full time. The transition from doing that full time to coming here, what helped me make that transition was the Patreon group, starting that up, the Discord, because no way I just wanted to leave high and dry that income. So Patreon helped subsidize that to an extent, not like the full extent yet, or maybe ever, I don't know. But it did help out a little bit. So I'm definitely making less on Patreon than I did in my career, right? Including like how they took care of you, the matching, the benefits, the healthcare, right? Everything, hands down, boom, boom, boom. Is a big difference. But I enjoy this because it does free up my time, and I love doing this. Oh, excuse me, Coco. All right. Volume super low? I don't know. How about now? I mean, it's coming into the yellow. I'm not going to clip it into the red. As far as like the mic. WBA is getting slammed. If WBA, what about CVS? WBA is what, Walgreens? Yeah. Slam City. CVS is probably doing the same thing. Yep, down 10%. Slam City. What's going on in that world? Yep, CVS is dead also. Thanks, Marmot. Appreciate that. Volume's good. All right, thanks, guys. I appreciate that. Yeah, there's always like kind of like one or two people that it's like some sort of a problem or something. I don't know. I don't know. Okay, let's take a quick look here. So S&P 500, it literally is just doodling around the weekly expected move. You know what I'm noticing here, though? We have this low, and it could be a higher low in place right here. And we have a, lower high, higher low, still doodling around here. So, hey, perhaps maybe this is setting up for a little pop higher and just kind of working itself off of this. From what I've seen in the past, a lot of times at these lower expected moves, they kind of just like pull in, they just trade around it. So even a move higher, watch the 5-day moving average as time and price continues, this can start turning around. If it gets above that 5-day moving average and it's declining, it's bullish, but with caution because it's declining. So you'd want to see it turn back around and prices start heading back up like so to be a little bit more confident. But overall, I mean, price action has been going sideways. We're getting a little clipped here. Market net flow, convergence is waning, still a negative divergence. So nothing that I'm like interested as far as executing into. I executed a little bit earlier this morning into a few very quick day trades. Done for the day there. But as far as swing trades go, I didn't do a single thing today. Yet. Still got a long time for the day. The big level down here at bookmap is still here. So 52.32 came in when? It came in right here. Boom. So we started seeing that sell side action. That's like 3,000 contracts, people. That's a large order hanging out there. So we'll see if that holds and continues to hold, or if it pulls it, or if it fills it, and we see just a huge move in volume. But you can see here on bookmap, even if I look at this and zoom in, I mean, nothing. Really nothing here. So this opens the door to a pop to 52.50, which is the level we identified yesterday. I mean, or even a pullback down. Like it's just sideways chop right now for me. If I have an edge, I'll mention it. If I feel more confident, I'd mention it, but I just don't right now at this current moment. So I just sit on my hands. Let's look at 0 date. It looks like 5,200 still remains at level, and we're kind of floating right around that 5,200. How's that, right? We identified this early in the trading session. We're just floating in that area. Floating in the box. Floating in the box. All right. Yeah, some healthcare names really got cracked today. I might have to exit out of mine because I took a XLV trade, but I used a CURE. So I can use less, and those are big moves to the downside. And we're still roughly around the lows of the day, so I might have to exit my trade. I was going to wait till the end of the day to see if anything happens. Like I said, I've already taken profits up here on this day, or was it this day? I can't remember. And now we're getting some sell side. So now what I have left in the position is down. Yeah. My portfolio is down as well today, but it's not, I'm pretty happy with the performance today of my portfolio in such a negative environment. I'll screenshot it so you can see the down day. Because this to me is where the real skill comes into play. I don't know why it's so small, but so I'm down Can you even see that? Why is the screenshots doing that? It's so weird. Usually it takes a high quality. I wonder if it's in my monitor. I don't know. Minus 0.41. S&P 500 is down 0.9 right now. All right. As we're pulling into the 20-day moving average, that's inclining, by the way. So, you know, you can bounce right here, fill this gap back up, and people are going to be like, see, something bad was going to happen. And then you look back at it in 10 days, and we're like up into another all-time high again. It's going to be a hard time to fight this trend, that's for sure, right? But I mean, a lot of these names aren't getting clipped too hard, like the larger market cap names, right? Google, right? It looks like it'd be down big, but it's really just an inside trading day. Nvidia is only down 1% off the lows, you know, right now. And then Apple would be the bigger one that got clipped under a key level, making a new low. Microsoft's down about 1%. Big whoop, well off the lows. I mean, let's look at the S&P 500 sectors. We got two sectors that are up, the energy sector and utilities. So it does seem more of a risk focus, risk off type of move, or more intermarket. Like when you're looking at things like the 10-year yield, it's off the highs. That's for sure. It's at the lows of the day still. What's the dollar up to? Yeah, dollar's off too a little bit here. Makes sense. It's just consolidating. And then you match on we're in negative gamma territory, so you can see a snapback. You can see a snapback right back up to the gamma flip line. I mean, the gamma flip line will probably change tomorrow, but yeah. Cumulative net premiums for calls are starting to uptick here. Still a bearish divergence, waned a little bit, like moving off a little bit here. But the S&P 500 is starting to kind of just float really around that 5,200, that put wall. I'd prefer this to turn gray if I was going to trade to the upside. I'd prefer it to turn gray. Because that means, I mean, albeit there's no edge, but you can get the contra move. So we're starting to get the contra move, so it's waning, but I mean, it looks like it could potentially turn gray here. All right, so I would consider this the higher low, lower high. I wouldn't even consider that anything right there because we haven't seen one of these highs break out. It'd be more if it like pulled down like this and then broke it. All right, contracting. Not surprised. I mean, we're coming into lunch hour, right? So you typically get more of a doldrum into the lunch hour, and then you get more volume towards the end of the day. DVN is looking like a pullback. What's DVN again? Is that an energy name? Devon. Yeah, Devon. Yeah, this moved far and fast, right? So perhaps energy comes off a little bit and consolidates, which we showed those charts on yesterday's market brief. We talked about the relative performance between energy and the S&P 500. And if that line comes off, typically you'll have the S&P 500 could move up. But when energy is outperforming the S&P 500, usually you get a pullback that we've seen in the past. That's actually what happened in, you know, the bear market of 2022 and various little pullbacks in the S&P 500, like the last 10% correction we had. Same thing happened. But now energy names have made a pretty strong move. They're probably going to need to consolidate at some time. So that, I mean, leads me to believe that energy comes off, and, you know, I mean, it gives me an opportunity. And you look at a lot of these mega caps in bullish context. Perhaps this is just a pullback, right? Perhaps it's just a pullback, and we try to reclaim some of these levels. Yeah, could be something bigger. Could be something bigger. And if it is, you can just be patient and wait for the 5-day to start turning back up and price to recoup those levels. If you want to be more aggressive, you can look at periods like this that we're seeing right now, how it's contracting and trying to break through, and maybe make for a shorter term trade back up. What's up with UNH? CrowdStrike and UNH. There's a couple of names that are being brought up right now. We'll pull them up. Yeah, this is a huge crack for UNH. That is a massive move. That's what's drawing down all these healthcare names. This is a big holding in the Dow too. So if I pull up just the diamonds, you know, big move down in the diamonds, actually back to a period of consolidation. Yeah, very, very large move in UNH coming into earnings. All right, we'll look at CRWD. I liked CRWD if it was to really kind of break through this trend here. Now it looks like it's breaking this, so I'd say I'd want to see the strength come back in and then break this trend back up. If you do an early entry, then I guess the stop would be the low of day, because we're right about the highs of day today. But it's been kind of a straight shot move, so I'd prefer to see it consolidate and tighten up before that. Somebody at my doorbell again? Give me a second. I don't know what's going on here. All right. I have another person coming in to fix the window. There was a scratch on it. Coco is the loudmouth doorbell. All right. We're seeing, okay, calm down. Still floating around that 52.50 here. Convergence is waning. So this is potentially, if it goes into gray, we can see that contra move. You can see here, we're trying to make a run for that prior swing high. Oh, man. Calm down. Get down. Get down. There we go. I think I'm going to end the stream here. I got too much going on, guys. Thanks for everybody for tuning in. I want to just I'll do a quick roundout on the market, but I have too many people coming in. Distracted right now. I'll try to put out a market brief tonight. Come here. All right, guys. All right, thanks for tuning in today. I'm gonna call it there. We've been live for quite some time, 2.5 hours or so. I appreciate y'all being here, but we're gonna